Hi guys, welcome to Traders Talk. Let me give me a second. Let me just set up my stuff here. Okay. Hi guys. Okay, all right. Sound check is good. Okay, hi. This is Ming Hon, your host for Traders Talk, and this is the show where we'll talk about trading. All right, I see. Who's that? Who's that there? Welcome back. And if this is your first time, this is a show where we'll actually talk a lot more on trading, and especially if you're a new investor or a new trader aspiring to actually learn trading or take up trading, then we will share a bit of information on just how to actually do that, and basically also share with you a bit more on the market ongoings and how we can actually trade the markets. Yeah, all right, cool. Okay, today we're actually going to cover a bit more on some of the recent happenings. Of course, from the previous past few weeks, the market has actually been quite volatile, and of course, last week we saw some light at the end of the tunnel when we actually had four very bullish updates, and of course, the S&P has actually rallied, I think almost about 7% up, and Nasdaq, I think about 10%, if not mistaken. Yeah. So basically, what we have actually lost in the past about 3 months, about 3 months. That means the market has actually came down since December and since January, right? What we have actually lost for about 2.5 months, we have actually got half of it back just last week. Half of it back just last week, and that just took us 4 days. And of course, some of the things which I also cover is also something on the volatility, which is also VIX, which I also explain later on with the charts, which we can actually share with you how basically the market has actually reacted. I think since the interest rate hike was actually firm means implemented. I think it was on 16th of March. 16th of March, it was actually effected, and of course, it is a 25 basis point hike, 0.25%. And of course, going on from there, yesterday there was another saga where Mr. Jerome Powell actually came out with something, right? And of course, that again spooked the market. Let me just share my screen. Okay, so today we're actually going to cover this thing about here. Yeah, all right. Let's put this up. Okay, so if you don't know this guy, this is the Fed Chairman Jerome Powell, and of course, he is actually a very powerful guy. He's a very powerful guy who can actually move the market up or move the market down depending on what he says. Yeah. So of course, if you are a trader, when he speaks, that's the time where you need to actually be careful whether you are actually trading the market up or trading the market down that day. Yeah, because if the market finds what he says is not is to their disliking, then of course market will actually go down, and of course if the market finds what he says is actually satisfying, then the market will actually go up. Yeah. So the effects are actually quite immediate. The effects are actually quite immediate. The second the things get captured, that means basically the media would actually analyze his speech, and basically all the things which he actually put out, whether it is a live speech or even whether it is actually a text or report coming out from the Federal Reserve, they will actually analyze it word by word. And in fact, I heard that there are actually algorithms, being punched in. I mean, his speech being punched in into algorithms, and that basically will churn out data to whether move the market up or move the market down. Yeah, and of course, yesterday after I think immediately at the time when he was actually talking, right, the market actually went down. In fact, it was actually coming down then in the start of the session. Then, of course, subsequent to that, it actually went up until he opened his mouth to talk about a possibility of interest rate hike again. Okay, so interest rate hike, if you have actually followed some of our past sessions or even other speaker on the other speakers, yeah, you will actually see that the market is actually quite sensitive to interest rate, right? Of course, as I said, there are actually few reasons. Of course, interest is actually a cost to business, especially companies which are actually borrowing, and of course, the other one is of course. Consumers, if you actually borrow money and all, have loans and borrow money, of course, with interest rate hike, you would actually incur more expenses, and of course, more expenses means less consumption. Less consumption would, of course, means that the corporates or companies would have actually less business. You might ration your money to only buy certain necessities and not the luxuries and all of this. Yeah. So of course, for companies, it is actually a cost. They have if they have borrowings, then of course the borrowing cost will actually increase, and that will actually eat into their profits. Yeah. And the other one is of course interest. Interest is actually an element which is also used in valuing companies, and of course doing the discounted cash flow in terms of the company's valuation. Yeah, the company's valuation, and this valuation will also affect the market prices, the stock market price, or the valuation of the company. And with higher interest rate, of course, the valuation would actually come down. Yeah, of course, in particular companies which are actually not making profits, that is actually a bigger effect to them. Because they will actually they will actually their valuation will actually come down with higher interest discounting. Yeah. Okay, so this S&P, later we'll go on in the detailed chart, and of course S&P closed 4461 yesterday, and this is actually S&P, and if you look at the other one, which is Nasdaq, right? Nasdaq. Okay, this is Nasdaq. Okay, Nasdaq also closed below 50 moving average, which is closed at 14376. Okay, yeah. And yeah, this was what I said. They are actually prepared to actually increase the next rate hike, which is actually expected in May, by 50 basis point. Of course, he did mention that it all depends on whether the inflation, not inflation, the inflation, the CPI inflation rate is actually kept intact. And of course, if it continue to rise, I think currently it's about 8%. And if it continue to rise, then of course, one of the measures which the Fed will actually take to implement to actually reduce this inflation is to actually increase rates. Yeah. So again, as usual, the Fed will say, depending on the situation closer to that point, they might have the possibility to raise up to 50 basis points. The same thing which she actually mentioned much earlier on the March interest rate hike, right way from I think it was more intense somewhere in December, where basically he was also saying the same, that he might consider to increase the rates by 50 basis point in March. And of course, as a result of that, we see that the market was a bit jittery, and it also went down since December. Of course, the whole thing started right way, I think, in March 2021 itself. Yeah, that the rate hike might come, and closer to the date, it is actually more affirmative. Same thing right now, 50 basis point for things based on current situation. If things improve, then he will consider to actually reduce it to 0.5 basis points. So the rate hikes are actually more or less firm. If not mistaken, there is actually about 6 or 7 rate hikes this year. correct. So they will actually raise it to about 1% by end of the year. Okay, so this was him, and okay, this again, if you look at the market, like I said last week, the market was mainly green. Whole week was green. Average companies would have actually went up the same as S&P, which is about 6 or 7% improvement in prices. Average companies, this is all the S&P, and of course the more battered down sectors or companies like in the tech sector, right? They would have actually improved probably by more than 10%, by more than 10%. Yeah. So it was one of the days or one of the weeks which we see this kind of momentum in the market, but unfortunately it was actually pulled down yesterday. And of course before we this earlier, before the start of the show, I did see, of course, the ES mini futures and also the Nasdaq was green. Hopefully the momentum can continue, and we also show that what are the points in the chart where you will actually need to actually have a look, or have I mean monitor it, monitor certain levels like. Okay, so this was yesterday's price action. Yeah, so from a full green, then of course you will actually see that a lot of the sectors or the companies have already did a slight pullback because of this uncertainty coming back again. I mean, if he were to actually say that he's going to increase 0.25 basis point, then of course it is actually already known in the market. But I mean, if he actually starts to put maybe 0.5, 0.25, because it's actually at a faster rate, right? Then of course the market would have a bit caution to that kind of effect. Yeah. So let's put up the chart. Let's put this down. Okay, let's put up the chart. Chart is this. Okay, can see. All right. So let me check. Okay. Okay, so this is the Nasdaq. This is S&P. Okay, let's put this. Okay, can. Okay, so this is the S&P 500. Yeah, and then of course you can see this little red line with a cross, right? It's like a doji, right? So basically, of course, this kind of things will shows that the market is uncertain whether it wants to actually go up or go down, because it closed relatively where the market has actually opened. Yeah. So the price action, of course, we came down all the way from the bottom here, and this was actually about 4,150 points right here, all the way from the bottom. So this was actually on the 24th of February, during the day where we had a huge 30 seconds drop in the market because of the invasion by Russia. Then of course immediately the market actually bounced up, but subsequent to that the market has actually came down again one time here, and then now it's actually the third time it actually bounced up. So I mean, of course when the market actually bounced three times at the same levels, right? Three times at the same levels, then of course it is actually quite a strong bullish signal that it can actually go up again. That's why last week was actually quite a strong rally going up. Yeah, and of course we did hit we did cross above the 50 moving average, and of course right now we touched the 200 moving average. We touched back the 200 moving average, but we did not manage to actually break up. We did not manage to break up. So of course this is actually a key level for you to actually look at, which is around 4480, around this level. Yeah, So this is actually one key level for you to actually watch. We need to actually break above this level. Actually, there are a lot of levels to break out. For, of course, the lowest one is of course this 200. Then once we reach that, we need to go up to about 4-5 before we can actually see a possibility of us going back to reach the earlier all-time high. Yeah, of course, the movement would not be one way up lah. I would say it will not be one way up. If it actually goes up, it would actually how to say, it would actually move up in wave patterns, and I would say the best patterns to actually see is we have a sharp move up. Then of course we would expect some retracements coming in. If not today, in the next few days, I would expect some retracements to actually come in, and hopefully the retracement comes in above this 200 moving average line. Yeah, 200 moving average line. That means they have to pass through the 200 moving average line. Then of course it does the retracement. It actually bounces off the 200 moving average. Then of course from there it can actually go up above this 150 moving average, and then the 50 moving average comes sloping up again. Yeah, so this is actually the best chart patterns for you to actually for us to actually have to actually confirm that we are back on our way up. Yeah, back on our way up. This is actually some chart pattern which we actually want to see. Of course there can also be a downside. Where how to say, where we don't go up so fast. Then that means basically it hits this resistance, it comes down. I mean this time round, I don't think it will actually come down all the way back to 4,157. Okay, of course if it retraces down, hopefully it don't retrace how to say below this below for about 4,250 line. It don't retraces above this line. Of course if it retraces above this line, then it is actually also a very bearish or very scary situation where it can actually go down further. Yeah, so if it retraces, then of course more, then hopefully it finds support around this level before it actually comes back up again. Yeah, so two ways for it. And of course for me, I would think personally, my view is that it will actually it can actually go up above. I mean, how to say, the market, of course, for those people who actually wanted to sell, right? There was already so-called 3 times the market has actually spooked them out 3 times. Yeah, so this is the one time which the market actually spooked whoever, all the weak hands. Weak hands means those people who are not able to actually hold on to their positions, those people who leverage their positions, or people who are actually forced into selling their positions because of margin calls and all these kind of things. Yeah, so this was actually one time where the weak hands would sell down or sell off their shares. And then of course this is the second time, and this was the third time. So already 3 times. 3 times is actually too much to bear, right? So of course for those who are hit badly, they would have been hit 3 times here. Yeah, and if they are out, they are probably taken out by the market makers. And of course once they are taken out, then the market makers would actually want the market to actually go up. Yeah, so this is how I view the market. Of course on the Nasdaq side, the situation is actually also similar. Yeah, the charts is actually also similar. Chart patterns is also similar to what this S&P had, right? See, bottom one, bottom two, bottom three. Yeah, then of course the rally up last week, hitting 50 moving average, ending yesterday with a doji here. Yeah, this doji is not too bad. I see it's right in the middle, right in more or less in the middle. Yeah, it's not like a graveyard doji, but it's almost like a dragonfly doji. Yeah. Okay, so of course, I mean, if you look at other indicators like the uh, stochastics and all, right, you would also see that the position is actually a bit overbought here, overbought in the market. Of course, because the rally is actually quite steep, yeah. And of course, if they what is that, retrace a bit, it is also fine. Hopefully, it retraces, finds support, and then goes up again. Yeah. So this is actually on Nasdaq. Yeah. Okay, so of course, on the company side, right? Let's put here. Company side, as I said, a lot of companies has actually rallied up. Yeah, this I mean the especially the big ones, the Apple has actually gone all the way from 152 to 165. I think most of the stocks have actually gone up. I mean Visa. I mean we spoke about Visa last week. We spoke about Visa, was it last week? Even much earlier, I think even last week we spoke about it. Earlier before that, we also spoke about Visa. That is actually a good buy-in position, or even a trading position when it actually dipped down to about 190. Yeah. So for Visa, it is actually a good rally up. Yesterday, it had a retracement of about $2 a slight retracement, and hopefully it finds support at 50 moving average here. Yeah, 50 moving average here, and then continue the rally up. Yeah, continue rally up. But mostly on the how to say, since few days, 2 or 3 days, I mean, not even since Friday itself, the financial sector had already a slight pullback since last week. Yeah. So if you look at XLF, right? Yeah, you can see that it hit 50, and then it also came down already Friday itself. You can actually see that the bullish momentum is, I mean, it actually hit a so-called resistance since last Friday, and of course yesterday itself, with all this negative news coming out, the sector itself had pulled back about slightly about 19 cents yesterday. In fact, more. Of course, the market actually rebounds back after the negative sudden drop in S&P because of the speech from Jay Powell. Yeah. So XLF. And then yeah, I mean, as I said, most stocks would have actually gone up. Adobe has actually gone up. The what is that, the healthcare sector itself, it has actually went up a lot more as compared to the rest. Yeah, if you look at the healthcare sector rally was actually since how to say, since 25th February itself, it was actually mostly all the way up, you see. Whereas on the other sectors, basically, I mean, 25th was actually, they actually went down. Then, of course, in between, they had actually came down. But of course, on the health sector, it was mostly all the way up, all the way up. And this is J&J. The other one is UNH. UNH has also gone up a lot, like J&J, right? J&J actually gone up a lot. In fact, again, it is actually toppish again right here. Toppish again right here. Yeah, you look at J&J, right? It's actually toppish again. And of course, if you look at the levels, right, it had actually forced top right here, and you can actually see that yesterday itself, it is actually doing some retracement. In fact, I thought it would have actually retraced at this level itself earlier, here, actually here, yeah. during this this bar itself here, I thought it would have actually retraced, but of course it was still quite bullish last week. Yeah. So now it's actually again having a possibility of it coming down. Yeah, if you look at UNH price action, right, in the past, it is actually always coming from high, going back up. It comes down again, comes up. Yeah, so a lot of levels where if it fails to actually breach the around the 500 levels. Yeah, so again, we can have a watch on this whether it actually retraces back. Of course, when it retraces back, then of course, I mean, you would probably find support somewhere around at this first level. Yeah, and of course, if the market is more bearish, then of course it can continue to actually still go below this level. So keep an eye on this, and of course, if it's already topish, then of course some of the strategies which we can actually place on this kind of chart patterns is on this bear call spreads, yeah, spread above this level, yeah, and hoping for the price action to actually come down. Yeah, so we are focusing more on options. We are focusing more on options, and of course, if you trade stocks, then of course you can also work on the stock and having stop loss above the highs. Yeah, if you are actually trading it down. But of course, again, as I said in the many sessions since weeks or months, and if you are actually trading the markets, right, the market is still quite sensitive to news, sensitive to news, and every rally up, right, it is actually not going to be long. Yeah, rally up and rally down, it is also how to say, rally down is actually extended, but in between since 2.5 or 3 months. Yeah, but of course in between they have some rebounds upwards, right? So all these are actually very short. So 3 to 5 days, if your positions are how to say, profiting, 3 to 5 days, if your position are profiting, I mean, it's a good time to actually exit. If you are more directional, that means you are actually entering debit trades, right? Debit trades, of course, it is actually because you are more sensitive to the direction movement, right? Then of course, if you take a shorter time frame, once you're up 3 days, I would say it's a good time for you to exit positions, and of course relook at the how to say, the price action again to actually establish new positions. Yeah, take profit first, and then of course see whether you can actually enter the stock again, whether it's similar or other stocks is also fine. Yeah, so take your profit first and then move on. Of course, if you are on credit spreads, then you might not be that sensitive to actually the slight movement up or down. If it is actually not too much, right? If it's actually not too much, then of course your position won't be affected that much. Yeah, and of course once the position continues to go back on your direction, then you would be able to continue to actually earn your premiums. Yeah, so less sensitive on the credit spreads, more sensitive on the debit trades. Yeah, whether it's a call or call spread, you would be more sensitive to price movements. So these are some of the stocks which we are looking at. And of course, the one which we have also covered in I think in January itself, in January or February itself, we have also covered a bit more on Starbucks, right? I mean, this is one company, of course, which I like, right? And of course, unfortunately, during the time when it actually came down all the way towards $90, right? $90, we thought that, of course, this is already a good position, but of course, the market continued to be bombarded with negative news, and and the stock continued to actually drop down all the way to about $80. And of course, during that time, I think even at about this level 90 and over also $80, right? I mean, for personally for me, I have actually also put in some positions, investment positions already, because I feel that this is actually a good buy-in positions. Yeah, of course, if you have not, now it's actually at about 86, and if there are possibilities for it to actually come down back to 80, then of course there are another good opportunity for me to actually come in again, and of course this time probably with a trading position into Starbucks. Yeah, this is Starbucks. Yeah. PLTR, yeah, okay, PLTR, of course, I think in the earlier sessions, we also said that during the time we did mention that PLTR, it seems that it is actually holding on quite strong at about $10 level. It's actually holding quite strong, about between $10 to $11 level. It was actually holding quite strong. I mean, because at that time, if you look at how the stock actually performed, right, whether the market is actually, when the market was actually bad, right, when the market was actually bad, PLTR was actually holding its position. In fact, sometimes even a slight positive. Yeah, and of course, when market is good, then it actually just follow suit to actually go up. In fact, now it's actually trading at about 1263, right? 1263, and again hitting 50 moving average, like many of the stocks hitting 50 moving average. Yeah, Palantir. So of course, Palantir is not. I mean, it is actually gone down by quite a lot, right? I mean, this is one of the so-called speculative stocks, which is within the tech sector, which is still haven't got enough I mean, proven its products or into the mass market. I mean, basically they are actually into more into government contracts, and now trying to actually put their products, which for me is very technical, and I probably don't understand what it does also in terms of what they sell or what they provide. Yeah, but of course for trading, I mean, it's fine that we can actually trade based on price action. Yeah, I mean, other stocks like SoFi, I mean, it has also been quite badly hit, right? And this is actually in the finance sector, right? Social finance, right? They're actually providing what is that? Banking services or loans and all this through apps. Yeah? Twitter, you see, Twitter has also gone up. Yeah, so as I said, most stocks have actually gone up. I mean, if you have a portfolio of, say, great or good stocks, right? Generally, I would say since last week, you would have actually improved your so-called portfolio by at least about 5 to 7%. 5 to 7%. Yeah. Okay. Yep. If you have any question, post on the chat box. Let me just see if there are any question or comments. Yeah. So if you have any question, post on the chat box. Then we can actually go through them. Yeah. Okay, so I wanted to also tell you guys that next week we will take a break. We will take a break from the Traders Talk. We'll take a break from Traders Talk because I'm going off for a short. short vacation. Okay, so if there's no questions, so we will catch you later on after my break, and hopefully the market will be continue to be bullish. And of course, if there's anything, you can also post on the Facebook or email me. Then of course we will go through your question and give you a response. So until then, I catch up with you, and hopefully we have a good trading week this week, and see you later. Yep. Bye bye. See you next month. See you. Bye bye.